This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial markets. And today is a good session. Even though if you look at the calendar, you can see that it's gray because I did nothing. I think it's still a good session because my playbook was there and it played out almost exactly as I anticipated it to in my pre-market plan. So I know that I have a formula, I have a model that I can come to the market every day at 9:30 Eastern Standard Time and apply it like this, boom. If it's there, I do something. If it's not there, I don't do anything. If I miss it, that's fine. I walk away because I know it's going to be there another day. It's probably going to show up about 10 times within the entirety of this month. So if I miss this move today, that's totally fine. It's going to be there again, right? So you can see that so far my performance this month has been lacking. And that's because I've been growing comfortable with my model, trying to understand it, back testing the absolute shit out of it to literally know everything. And I'll probably touch on that in that video. I'll probably touch on it right now. If I go to my back testing, this is the first month where I'm back testing this model. And you can see that I'm still sitting right around break even. But if I go to my notebook, this is where the magic is happening because I'm treating this month of back testing as an actual live trading month. I'm going back through it and I'm doing a monthly review and I want to find out everything. I don't know about y'all, but I am so addicted to finding out every little thing about my trading system because I know that there's a ton of pieces that have to come together to make a profitable trading system. So I want to know everything. I remember I used to watch this YouTuber, Waqar Asim. I'm pretty sure some of y'all have seen his videos where he's making a video about what it actually takes to become a successful trader. And he's listing all the different things that you have to know about your system to perform at an extremely high level in trading. And I'm sitting there thinking like, damn, like that is a lot of work. How do I even know? How do I even find out these things? How do I even test for these things? Well, now I'm actually doing that work and it's addicting because I literally want to know everything. So I'm trying to figure out trade management, how I manage my risk, how I manage my stop, how I manage my entries, how I manage my exits, the frequency of everything, like how often I can reasonably expect my model to be there in a month, how often I expect my model to not be there in a month, how many good trading days can I expect there to be in a month, how many bad trading days can I expect there to be in a month. I'm tracking the accuracy of my bias. How often am I getting the bias correct? How often am I getting the bias wrong? How often am I getting the bias indecisive, meaning I don't know what the bias is going into 9:30. I want to know exactly what my entry mechanism is. I want to know exactly what puts me into a trade. I want to know my playbooks. I want to know everything about my playbooks. I want to know exactly what they look like. I want to know exactly what days they form. I want to know exactly what the overnight session looks like, the pre-market session looks like, the opening at 9:30 looks like, where it opens at 9. I want to know everything, okay? I'm addicted to figuring this stuff out because, I mean, this is what it takes to have a trading system that performs at an elite level. So that's kind of what I've been working on recently. Kind of went on a tangent there, putting this in front of the daily review. But market approach, day selection, everything. Like it started with just this, right? With just this little page where I'm just like, okay, here's my trade style, here's my rules, here's my playbooks, here's this, here's that, here's my entry criteria, here's my market approach, here's my day selection. And then I'm like, boom, I start back testing it and I want to know everything. So now I have literally notes on everything, right? And here's the monthly review that I'm doing. I want to study day selection. I want to study setups. I want to study my entries. I want to ask myself what I'm trying to figure out. I want to review my mistakes. I want to study my bias. I want to study my risk and stop management. I want to study my entries again. I want to study everything, okay? So hopefully the work that I'm putting in right here, it's probably a lot, right? Probably looks like a lot to you. Hopefully I can inspire you to do some of this because I know that this is what it takes to perform at an elite level in the trading game. Not because I know that because I've already made it, but because I watch and learn from traders who are already successful and I just take what they tell me to do and do that. It's pretty simple, right? The people who have already made it, they already have the blueprint. They share the blueprint. All you have to do is apply it and follow it. It's pretty simple. And hopefully I'm inspiring some of you guys to put in this kind of work, do this work that is required to perform at an elite level. If you really want to make it in this game, hopefully I'm inspiring you to do stuff like this and be like, damn, this kid is on his shit. I need to do that too. That's why I make these videos. But anyways, now I'm really on a tangent. Let's get into the daily review. Thursday, July 10th, 2025. So I'm just going to read the annotations from where I recorded it in the pre-market session, because basically what I say is it's pretty much spot on. So based on the weekly chart, I'm not thinking this range is going to extend much beyond previous weekly high. So I'm looking to take price back inside the range as it trades near the high of it. Why? Because of this right here, the economic calendar. There's nothing on the economic calendar. So if there's no injection of volatility this week, then there's no reason for the market to really move. If there's no reason for the market to really move, what's it going to do? It's going to consolidate. It's going to move sideways. So if I'm expecting the market to move sideways based on the economic calendar, then I'm not anticipating the market to extend a lot beyond this high, right? So that's why I'm looking to take price back inside the range as it trades near the high of the weekly range. So I'm thinking about how that weekly candle is going to paint based on the economic calendar. On the daily, this close tells me the market is comfortable where it's at, but I like how it's poked previous weekly high and came off that. So I'm eyeing for a potential rally above that high to come back inside the range. So this is one of the things that I got wrong in my bias today. I was looking for the market to rally above previous day high and fail. It didn't do that, but it still delivered a reversal. I'll move myself down here. There we go. 4 hour. Based on the development of these candles, to me, it seems like the market is really struggling to hold on here and could fold towards clean lows below, supported by the weekly chart narrative. So I'm noticing how we have this high, and this candle has drove above that high, but these lows below are smooth and they are not yet taken, right? Now, why do I think the market's going to fold here based on the close of these candles? Because we had this strong push up, and that was immediately followed by a large down candle, and then we see kind of a range, right? And the market pokes the high of the range. Now I'm looking for it to deliver the low of the range. On the hourly, I blatantly state I like the idea of going for these lows, meaning I have confidence in a bearish bias. These are my best trading days. They always start with confidence in my bias. So at the time, I have the close on the 8 o'clock candle. The time of this screenshot is 9:12 Eastern Standard Time. So order flow has not shifted bearish yet, so I'm eyeing the potential to drive up into previous day high at 9:30 and fail. So I know at this point in time the market is not yet bearish. I need to see it drive up first and then fail. I like how smooth these lows are. I was looking for Wednesday daily high. It didn't deliver that because it just opened at the high day and failed, which is fine. The market told me it was going to reverse at the high day, so I'm still looking to take that idea. And then on the 15-minute, this is my focus for today. I'm looking for these smooth lows in the London session. I would like price to open near the high of day and push away from that gap open towards previous day high and fail. So this is previous day settlement. This is yesterday's regular trading hours close at 4:14 p.m. And where the market opens today at 9:30 a.m. is today's opening price. So I want to see the market open above this black line, create a premium gap opening, open near the high of day, push up, and then fail. And this was my focus today. And I say, to me, it seems like there's a lot of room between where price is at and Wednesday daily low. Like there's nothing strong in between that, which could actually support price. It looks like a potential low resistance liquidity run. And by that, I just mean it looks like the market is not going to face a lot of resistance trading lower, because it's not, if you look back inside this price leg, there's nothing solid in that looks like it could support the market besides this little opening right here, which is where the market actually forms the low of day today. That's another detail that I miss. So if we pull up to the chart, 15-minute time frame, what ended up happening? The market does open near the high of day. We have a premium gap opening. It opens above previous day settlement like this, right? Drives up and then fails, attacks the London sell side, delivers that gap right here, takes out all of these smooth lows. So, I mean, this was perfect. This was my bearish premium gap opening setup, perfectly in price action. Everything that I need to see, picture perfect, frame it, put it on a wall. This is it. Like, it was beautiful, but I wasn't able to be a part of that because it happened so fast and suddenly, which taught me a lot about how I feel and how I behave when the market is leaving without me and I'm not a part of that move. So I planned for this setup. It delivered perfectly. I just wasn't able to get on side with it. Now, I'm not mad about that at all. I'm not frustrated because, I mean, I'm actually happy after a day like this today, right? Because now I have evidence, concrete evidence that, dude, your model works. It shows up there and it delivers like crazy. Like eventually I'll get to the point where I'm consistently walking down these like 100+ handle moves, right? The market literally dropped 170 handles from the open all the way down to this gap. So it's beautiful. Eventually I'm going to grow to a point where I can, consistently walk this down. So we go to the 1 minute, and then the bias was just so easy today. I mean, look at the smooth lows in London. Boom, perfectly smooth, right? I love to see shit like this. I'm using that as a draw on liquidity. If you look at the pre-market session and look what was setting up in the pre-market session, obvious sell side below, obvious buy side above. What does the market do first? It takes the buy side first. So what can I expect next? Deliver the sell side. It's pretty easy, right? Now, touching on my entry mechanism, give you all an idea of how I get into trades. Let me remove this because it's in the way. Let's look at the 925 candle, right? This candle opens, it trades up, it takes the pre-market buy side, but it closed lower. That's bearish. That's a sign of weakness. Because the market closed lower, it tells me that it's rejecting this high. Because if it was bullish, it would just lay a fat candle over it, right? Since it took it and closed below it, that's bearish. That tells me on the following candle, I can look for the market to drive above that high and fail, because I get this sign of weakness here. So I'm anticipating a drive above this candle's high to fail. So if we annotate this, go down to the 1 minute again. So here is the 925 candles high on the 5 minute, right? Peel this back a bit. You can see how it takes this high on the 929 candle, took the high, and then boom, closed back below this right here. So that's the signature that I'm looking for to confirm that the market has closed below this high on the 15 minute and the 5 minute, because this is a half hour interval, right? This is 9:30, which means we're getting a new candle on the 15 minute and the 5 minute, and even the 30 minute too. So those candles are all closing below this high. That tells me that's the first sign that the market is rejecting this level. From there, I can anticipate a drive above that to fail, and it does. Boom, the 931 candle is fat, it's large, it's a down candle, and I'm going to pull up a video from today's session. I record my sessions too, so I'm tracking the data on everything, right? Let's go to 930. And this will give you all a better idea of my thought process and how I was reading this. Okay, boom. So the market opens, it drives up, right? As soon as this candle closes, 3, 2, 1, it forms a premium wick. Now I'm looking for the market to trade up into this wick and reject it. It doesn't do that, obviously. It just left like crazy, right? So now I see, okay, it can't even trade up into the wick. It's laying, if this closes as a large down candle, I'm taking this up candle as a sell easily. And it does right here, right? Place my sell limit order, and it just leaves. Like straight up, it just leaves. Goodbye. So I'm like, okay, and I start freaking out and panicking. I'm thinking, where do I place my sell limit order now? Like what? It just left so fast and so suddenly, which taught me a lot about how I behave in this situation. Go back to the daily notebook. Let's look at the lesson that we learned, right? So how I react to moves happening suddenly. I feel a lot of anxiety over how to get on side with the move as the market continues to move away from my limit order, and I am forced to drag it down. I'm making little cuts anywhere I can to minimize the risk, which is why I don't get filled. So as this move is happening suddenly, initially my limit order is here, right? Then it's here, and it's like here, then it's here, and then I'm like, oh shit, I'll never get filled, and it just delivers what I was looking for. So as the market's moving down, I'm trying to get on side with it, but instead of, I don't like to market in, because every time that I market in to the market, I do something impulsive and stupid. So I try to avoid that, and I try to execute on limit orders. Maybe this was the right kind of move to do that because of how heavy this is. But usually like 9 out of 10 times, the market's going to come back and rebalance these gaps and then continue lower. It just didn't do that today and happened so suddenly. So as it's dropping, I'm slowly, I'm kind of panicking. I feel a lot of anxiety about the idea. If I just go to my live commentary, all right, the move happened. The idea I was looking for is confirmed, but it's happening so fast it gives me anxiety trying to figure out how to be a part of this move. I've got my sell limit order on the 5-minute breaker inside a gap. It should rebalance to and continue lower. From here, I am thinking London lows. So that's what I'm targeting. I feel like I'm making every little cut to minimize risk on this trade. I also feel like it's probably not going to fill me. At 940, I would like the close on the 935 candle to show me signs of support. I think it signs to support that it's likely to form a 5-minute BISI and reject that to trade lower. The next candle can drive into that gap and close near its low on the 15-minute. That would confirm everything. Still really anxious about this idea, right? So on the 5-minute on the 935 candle, I was looking for this to close something like this, and then I wanted to see this candle drive up above that high, rebalance to that gap. I have my sell limit order somewhere in here, and it never did that. It literally just left. So the reason I left is because it was just rejecting the breaker, right? I don't enter off of breakers ever. I enter off of obvious gaps and order blocks. So this was not an ideal fill for me. Like, I'm just not used to taking a trade like this. 9 out of 10 times, it's going to do at least that and at least reach into that. So maybe a lot of y'all read this move today too and missed it. This taught me a lot about how I react to this kind of situation. I'm making, like, as I drag my limit order down, I'll drag it like here, and then I'll think to move it down here, but then be scared to move it down here because now there's more risk on the trade. So now I'm thinking, where am I going to move my stop loss? Now my stop loss has to be adjusted to right here, and then it keeps moving lower. So now I'm like, okay, I'll make it right here, and then my stop loss can be like right here. So, you know, just not a good situation for me, but I'm learning, right? Now that I'm aware of the situation, the next time I'm in it, maybe I can act accordingly. Maybe I'll just mark it in because I can see that the market's rejecting the breaker here, right? If I annotate that, you can see how this candle like barely touched the low of it, and then down candles follow. This becomes an order block. Maybe I can use that. Another thing is, another big lesson is I learned is I lack awareness of the higher time frame range that I'm working within, right? Because I also saw this as a sell. If I go to the video, wrong video. Let's see. So I see this obvious gap as a sell too, right? But now I'm framing the risk on the trade because I was targeting London low. So now I'm framing the risk on the trade, and if I do this, where would my stop loss have to be here? It would have to be above OBMT, mean threshold of the order block at least, so probably like right there. And I would target London low. That's 1.39R. It's not worth the risk for it. What I don't realize is that there's range below the London low for the market to run. Like, for example, these lows down here, right? So I'm not aware of the higher time frame range that price is working back within. I'm only focused on delivery to London sell side, but there's room to run beyond that I'm not aware of because I'm not aware of the higher time frame range that I'm working with. Just looking at the 1 minute and 5 minute. So if I establish all this liquidity down in here as the draw, realizing the higher time frame range, and this obvious gap, all these smooth lows in this gap, right? So I'm looking for this to deliver, but what can it deliver beyond that? Working back inside the previous day range. We have these lows here and this gap down here, right? But my focus is only on this, and I don't see the possibility for the market to continue beyond that just because I'm not aware of the higher time frame range that I'm dealing with. So boom. If I'm aware of that range, there's almost a 5R on this that I just wasn't aware of because I was only focused on this. But what can it deliver beyond that level? Maybe this. So I had the idea of selling this gap. I didn't like the risk on it because I was only aware of this. So I've done a lot of talking in this video. Don't think there's much more to cover besides just what I'm working on, which I already touched on that in the beginning of this video. I think I'm going to start backtesting the next month, August 2022, and just continue to refine every aspect of my trading model and system as I go. Because like I said, I'm addicted to figuring out everything. Everything has to be known. If I want to perform at an elite level, I got to put in the work. I got to know how to do everything. So hopefully you are inspired to do the same and put in this work. If you really want to make this shit happen, you got to do this kind of work. I know where I'm going. You should too. I can get there. You can get there too. So let's make it happen. See ya.